Hello, everyone. This is Victor Riesco with a market update for the 23rd of June 2025. So go right into it. Lots of things happening, obviously, because of the war in the Middle East with Iran. I'm not going to get into geopolitics here, but we're going to analyze what's going on technically in the markets and how can we position ourselves correctly and take advantage of whatever the market gives us. So let's start by analyzing the trends. And basically, the change that occurred last week was that Bitcoin shifted to a short-term downtrend on June the 18th. We'll see the charts about it. And other than that, everything, the long-term and short-term trends remain unchanged. So let's start with the SPY, and you see that it's in a short-term uptrend and long-term uptrend, and we're just pulling back here to the 21 exponential moving average. That for me is a very important level. We see that momentum is negative short-term, but the trend is still holding on. This is I'm doing this video in pre-market, and basically the market is flat. No big changes. We'll see what happens when it opens, but we'll see. It's really important for this 21 day exponential moving average to hold on. If we break down below this, we'll probably shift into a short-term downtrend, and then we could probably see a deeper pullback, maybe towards these levels around 570 in the SPY. Nasdaq, something similar to the SPY, also pulling back to the 21-day exponential moving average, but it's holding on better than the SPY relatively. Momentum also shifted short-term negative, but still we don't see any major technical damage. If we break down and shift to a short-term downtrend, we might get a deeper pullback, maybe towards these levels around 505 or maybe 502, which was this gap from May. But we'll see. Russell 2000 remains the weakest of all the major indices. It's still in a long-term downtrend that hasn't changed. It is in a short-term uptrend, which triggered back here in late April, but we're seeing a failed breakout here. We tried to break out above these key levels that were resistance, but we quickly failed, and now we're threatening to close below the 221-day exponential moving average once again, which will be pretty negative. And also, relative strength-wise, is by far the weakest index. So this is not an area that I'm focused on. Making some trades, I focus mostly where the strength is. And the Russell 2000 has been a constant underperformer, except for a few moments, maybe during the last years, but usually it's a tough index or sector to trade if you're bullish. Gold remains in a long-term and short-term uptrend. It's also pulling back towards its 21-day exponential moving average. Same for the gold miners, if you're interested in that. So this actually is one of the few charts that looks decent for a probable pullback buy in the coming sessions. So it's still holding its short-term uptrend and positive momentum. So if we see some strength here and we see short-term momentum flip bullish, it might give a really good entry. Also, if you're a premium seller like me, most of my trades are done by selling premium. The implied volatility in gold is still pretty high, so you get some nice premiums if you're taking those type of trades. And now Bitcoin, I'm using IBIT as the proxy. This is pre-market. We've seen that after this attempt of a breakout to new highs, we quickly failed. Then we tried it here again and got sold off again. And actually, last week I tweeted. If you look at my Twitter, I tweeted when Bitcoin IBIT had this reversal here, which gave some bullish signals. But I mentioned that when a stock is under distribution, like here, you see this is distribution, this is accumulation. When a stock is under distribution, you'll see that you'll have a lot more failed moves or very choppy moves, like we've seen here or here. So hopefully you want to see that accumulation is with the trend. So I said that I was suspicious of this move higher because of all the distribution. So and actually that's what happened, and we're now in a short-term downtrend, as I mentioned, which we flipped on June 18th, and with negative momentum. So we'll see what happens. We could pull back around to these levels, around 55, 53 and a half, and then we'll see what happens. That also will give it time for the 200 exponential moving average also to catch up more to price, which would provide more support if the pullback is deeper. But definitely not a place for short-term trades to look to buy. You want to wait for the short-term trend and momentum to flip bullish. You want to go long. Also, no oversold signals. Also, like you could also consider a buy if we get an oversold bullish reversal, like here signal. But here's another one. But at the moment, also we're pretty far, I think, from a bullish reversal signal. So this setup would have to get a lot deeper, maybe to these levels, and then we see some strength, and that probably could trigger a bullish reversal signal, which is not present at the moment. And finally, junk bonds. Actually, they still remain in a short-term, long-term downtrend, but this would I think will probably flip bullish this week, as we can see that price is holding above the 200 exponential moving average and above the 21 moving average, also crossing over the 200. And also we're seeing a lot of accumulation as of late in this sector, which is interesting. If things were really that bad, would you see high yield bonds performing relatively well compared to the rest of the market? Or maybe they're discounting future rate cuts? I don't know, but they're holding on pretty well despite of what's going on. So I think this is a bullish sign that they're not selling off. When we got before that big sell-off in March, April, this sector was underperforming for quite a while, and actually their highs were made in October. And so now we're actually seeing kind of the opposite. And if you're into more technical patterns, you could argue that here's kind of like a inverse head and shoulders forming or triggering. So you could see a move from the size of the head, probably back to the all-time highs or more. So this one I'm watching. Okay, and now back to the breadth. Well, this is also, if you follow me on Twitter, I was mentioning that short-term breadth was deteriorating. Sorry, and actually we flipped to a negative signal on June 17th. But long-term and mid-term, the signals remain bullish. So I'm bullish mid to long-term, just cautious short-term because of technical action and how breadth is behaving. So let's look at the charts. So if we see right here, this is the short term, the one in the lower pane. This is the mid-term, mid-pane, long-term, high pane, the top pane. So just long term, actually we look pretty bullish. We actually made a new highs, relatively 52-week highs on breadth. So that's a good signal. And we see basically no deterioration here. Mid-term, we're seeing a bit of a pullback, but still in very positive terms. We see that the greens over the red. When we flip, like here, the red over the green, this is like a warning sign. And we got this, near the end of March, and then we got this nasty sell-off, not there right now. But short-term breadth right here, we've seen that when we get overbought short-term, usually we get some type of pullback, which usually tend to trigger good buying opportunities. We got another one right here. If you follow me on Twitter, I was talking about this, and then we got this really shallow pullback to around the 200-day moving average area in the SPY, which gave a really good buying opportunity. Here when we cross below 35, it's short-term breadth is negative, and when we cross above it, it's a nice sign to get long again if the other breadth measures are positive. And actually that's what happened, and some really nice. The indexes didn't move as much, but if you're trading other stocks, individual stocks, there was a lot of great moves during this time period. Right now we're below 35, and there's still no indication that this is gonna flip. So while we're under 35, we want to be cautious. It means the market is pulling back, and we don't know how much it's going to pull back. So we want to wait for this to flip bullish once again to get more aggressive. Right now, we're not seeing this. So also one thing to notice is you could argue that we got a bearish divergence here, that the indices made new highs, but the short-term breadth indicator did not. So that kind of showed us that under the surface, the move was a bit exhausted, and it's okay. The market pulling back after this move from the blows, it's completely normal. So I'm waiting for this to see how it develops. We might get if this gets deeper, we might get to the oversold levels here below 10. So which also usually tend to trigger really good buy signals for mean reversion strategies, and also they tend to mark a near-term bottom for the market, which could be a really good tradable rally, or you can get in as a pullback buy in the main trade, which is completely bullish at the moment. But I'm monitoring that. But as of the moment, short-term breadth is negative. Now, looking at the sectors, this is the sector ranking. The sectors are ranked based on relative strength in different time frames. Also, how volume is it showing accumulation or distribution. So the combination of these two of all these things create this ranking, and basically you want to try to be invested or trading the sectors that are most bullish, and try to avoid the ones that are in the bottom of the pile here right now. But if you see overall, like except for oil that gained almost 11% last week, and ARC Innovation, which had a massive 9% gain, which is actually very risk on. Energy also related to oil, 2.7%. Other than that, most of the market was negative. Some sectors got hit pretty badly. Gold miners, emerging markets, China was almost 5%. Biotech, growth, materials, Bitcoin. This is really interesting. Europe large cap also fell 3%, and this was a leading sector for quite a while. We'll look at the chart. The Dow 2%, home builders, healthcare 3%, which has been really weak. But overall, we average all of this. The market was, all sectors combined, was down 0.8%. And long-term trend, we lost one sector. Short-term trend -6. There was 29 sectors in a short-term uptrend, and now only 23. And versus staples, the red strength, 28 are outperforming them, staples. So we lost one. So short-term, weakness. Mid to long-term, we see still bullish signs. The amount of sectors in a bullish trend, the amount of sectors in a short-term uptrend, and the amount of sectors in beating the staples. It's 28 out of 33. So most of them are doing okay. So at the moment, I'm seeing what's happening as a pullback, a short-term pullback. We'll see how deep it goes, but I'm looking to when all this happens, transpires, and we have more clarity. Also, all the news in the Middle East, and the market shows some bullish technicals once again in the short term. I'm see this as a buying opportunity, but cautious in the short term. Also, another caution sign is the VIX, that it has remained and closed above 20 and above the 200-day moving average. When this happens, it doesn't mean the market's going to collapse. Sometimes you get a quick spike and then you go back. But now we've held a few days above this, and usually before the big sell-ups occur, you see this behavior. You see the VIX trading above the 20 and above the 200-day moving average, and then that's when we can see some nasty sell-ups occur. So just not at critical levels at the moment, but it's a warning sign, to be cautious. Also, I've shown this in previous videos, but this is a study from Sentiment Trader. But basically, what happens if you invest 10,000 when the VIX is above 20 or when it's below 20? And the results when the VIX is below 20 are so much favorable compared to when the VIX is above 20. So, the return from 1986 to 2025, 600%. The max drawdown is 20%, and the max time you take to make a new high is 1,519 days, right? But if you invest only when the VIX is above 20, the return is more than half, less than half, is 287%. The drawdown triples, and the amount to new highs also triples. So the wind, let's say the wind is in your favor when the VIX is below 20, and you have the wind against you when the VIX is above 20. So right now we're above 20, so be cautious. There will be opportunities. There was a lot of good opportunities to make money the last few months. So taking it easy until we have better short-term risk signals is very prudent. Also, what I'm looking for, like right now, also seasonality is in June is actually tends to be the weaker part of the month, but from July onwards, we see that seasonality really picks up to the bullish side, and actually July is one of the strongest months of the year. So what we could be setting up is some further weakness or chop for the until the end of the month, early July, and that's also when we kick earnings seasons. Banks are like the first major component that gives earnings in around mid-July. And usually in earnings seasons, before earnings seasons and during earnings seasons, stocks tend to behave really well. So that coincides with this part of the year, which tends to be bullish. So as I said before, short-term cautious, but I'm looking forward, for this pullback to end. Let's see how far it goes. But I'm definitely looking for stocks to buy after this blows over. And I mentioned Europe. Just wanted to mention the chart. Europe had been leading and showing a lot of relative strength against the staples, and basically the whole market and itself also had a very steady trend. And after this sell-off, it quickly recovered and actually went to new highs in May, while the market was still just recovering some losses. But this is pre-market right now, and we see like the short-term trend turn negative on June 18th, and now we're really starting to sell off, and we see a lot of distribution, and we're starting to see how this strength line is starting to roll over also. So there's some changes going on with what's happening in the last the war in Iran is affecting different country sectors different ways, and Europe clearly the market is not discounting that this is good for Europe. So and it really went down in the ranking of sectors during the last week because of this sell-off. So just something to note. So well, that's it. I hope you found this update useful. You can follow me on Twitter. I post there a lot. It's Victor Riesco CMT. You can find me there. And I would like to hear your comments, suggestions, on what kind of things you want to see in the future videos. So, well, have a good week and good trading to all. Bye bye.